All right, hello everyone. How is everyone doing right now? Okay, so let us begin. Okay, so the goal of today's live session is to go through a brief market analysis of how the market is doing, as I'm sure most of you who have been following the US market will have known. The past 2 days or 3 days, in fact, since Wednesday, the US market has been dropping rather steeply. So let us review and see what my thoughts are. And if you have any thoughts on the market sentiment right now, feel free to share your views also in the comments that in the live chat. And if you have any questions, likewise also do drop them at the live chat. I'll be checking them frequently, and I will answer all questions as to the best of my ability. Okay, and then after that, we'll move into some value investing insights and also question and answers for most of for those of you who have uh, curious and burning questions about the value investing strategy that I have been applying for my own investment portfolio. All right, I've been receiving a lot of curious questions on my videos on the comments below asking this and that, and I've been replying to all of them. So I'm thinking like, why not just create a live session and then I can answer along the moment you ask instead of having to post a question in the comments and then waiting for my answers. All right. Okay. So before we could even start, I have a question. What is my views on banks? So U.S. banks, if for banks, let's start with the U.S. banks. U.S. banks, they are currently quite undervalued. And if we focus on the big ones like JP Morgan and the Bank of America, they are definitely undervalued right now. Going by the fact, how do I value banks? I use the price to book ratio. So we can take a look at them later on. And if we apply the banks using my value investing strategy, uh, you can see for yourself that the banks themselves are actually quite strong and passes most of the criteria. So they should be quite strong. All right. So as for Singapore stock, ISDN and bulk state, okay, let me come back to this after we have gone through our market analysis. All right. So let us begin. So the last time I've talked to y'all in this live setting was on the 21st of May, if I don't remember wrongly, and it was over here on the chart, right? These three candles over here. And back then, I have someone asking me, someone asking me like, do you think the market is overbought? So I remember clearly that my reply back then is that the market is definitely at a high right now, but I don't think it is overbought yet. Just simply because I follow the overbought criteria by these three conditions. So the first condition is that the prices should touch the upper boundary of the Bollinger Bands, the two black lines that you are seeing over here. The second condition that I would like to see is that the stochastic is at overbought territory. Yeah, so overbought the territory, we can judge them by and judge them if we see these two lines crossing above the 70 mark. If you want to be more stringent, you can set this 70 threshold to be the 80 at the 80 level mark as well. Yeah, there's no problem with that. And then lastly, the third criteria that I want to see is RSI to be in overbought territory as well. And we judge that based on the line crossing above the 70 level. That's shown in the green. That's shown in the green line on this chart over here. All right. So back then on the 21st of May, we have criteria 1 being met, criteria 2 being met, but the third criteria was not met yet. So based on this, I say that it is expensive, it is at a high, but it's not overbought yet. And sure enough, after I said that, the market went up uh, rather 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 quickly and sharply, I would say. So, and especially for most of the stocks like the tech stocks, Apple and Microsoft, they have this very huge spike upwards. And I remember telling some of you who were chatting with me back then that the price action right now is crazy, all right? Everything is spiking up so high. Now is definitely not the time to buy. And sure enough, right now, when we have all three conditions being met, prices touching the upper Bollinger Band, the stochastic being overbought, and this time you see that the RSI is also overbought. You see this red color at the line, red highlighting of the line here is just showing you that the RSI is being overbought. So now that all three conditions have been overbought, and very shortly afterwards we see a very steep correction of the SPY, which is the general, which is the broad market that is tracking the US index. Okay, so my views as to the how the market is behaving, I think that this for the past 2 days, these two drop have indeed been steeper than what I can steep is steeper than I expected. It's much more steep than it's beyond my comfort. Yeah, but in fact, things could still be on the normal route to recovery. If we see if you see even during a normal bullish market and on an uptrend, corrections like these do occur. And so even though this correction is slightly steeper than what I've expected, I just expected prices to slowly dip down, and not show a huge gap over here within a day itself, right? But if we do an analysis using the Fibonacci retracement, and we mark the low of the at the start of the previous impulsive wave to the top of the end, and also the top of this impulsive wave over here. These are the levels that's being shown. Let me adjust this for you. Okay, and zoom it in. You can see that right now the market, the price is being supported at the 32.8 Fibonacci retracement level as of last Friday close. And this also coincides with the 150 SMA, which is shown in this green line over here, the 200 SMA, and the 302 horizontal support. So this level right here is definitely acting as a very strong support that is supporting the market as of last week. But that doesn't mean to say that the market cannot continue to drop down any further. All right. In fact, if the correction is strong enough, we can, during the course of the next week and maybe the next 2 weeks, in fact, we will definitely see prices breaking through this strong level of support, and perhaps prices could even reach to the next strongest area of support, and that would be the 294 level, which is this horizontal support that you see over here, the 100 SMA, which is in yellow, the 61.8 Fibonacci retracement level, which is also in the vicinity, and by the time when the prices travel to this zone over here, we can expect the 50 SMA to have traveled up to this area as well. So after the 302, the next strongest level of support would be the 294. And in fact, on a normal healthy correction, correcting back all the way to the 294 level, which is also the 61.8 Fibonacci retracement level, is nothing wrong, all right? And we can still expect the entire bullish sentiment and the uptrend of the market to be still intact. So I'll only start worrying if we can see the prices break below this level, one, two, three, these three levels. If the prices can break below and stay below for, let's say, a day, yeah, just close below those levels for a day, and then I'll start to revisit my analysis of the market, and then we will have to reformulate another thesis on, and then to analyze where the market is likely headed to back, if that happens. All right, so that's all for now. So currently I'm still bullish on the market, on the US market, and I think that after this dip, at most they should come down to the 294 and then show a rebound and then go up. And then if prices can in fact hit the 294, I'll be taking some long positions along the way, and perhaps if Monday open, they can still, if prices still show to be supported by the 302 level, I also start to take some long position on the SPY. Yeah, so that's my plan. And all right, I'm seeing a lot of comments by you guys. So interest back to the views on banks. Interest rates are staying at zero. Yes, interest rates staying at zero will definitely hurt the banks, and that is why also we see the banks correcting so much. If we go move on over to the Bank of America, one of the bank that I've been following rather closely, and I've also sold cash secured put on this stock. If you have been following our channel, I've recently did a wheel option strategy video and also explained how the strategy works as well as the pitfall. So along with that, I've also taken a position on the Bank of America, and interest rate dropping to zero, that has already been reflected amongst this huge dip over here. And then this has also been accounted by the relatively as seen by the banks. As most of the other stocks. Okay, I'm back. Sorry for the technical issue over there. Have a slight connectivity problem. All right, so back to where I was on the banks, the US banks. So interest rate being down to zero, I feel that it has already been captured into the price action. And when we see most of the stocks that have nothing to do with the current issues at hand, they have all already recovered back to all-time highs, while our banks is still lagging those stocks and is still a distance to recovery to back they were at the start of 2020. All right, so as for interest rate being zero and everything, I feel these are problems that will get solved sooner or later, and therefore not right now is the best time. It is not say the best time, but a good time for us to accumulate into banks while they are cheap. And when the issues are resolved, we can we can then uh, we can then start to benefit from our low purchase price when these stocks recover. All right, and also another point is that the Fed, they have been pumping in a lot of money, so all this will might cause like inflation problems in the future. And when inflation comes, you can expect stock prices to increase along to tackle the inflation as well. So this is my takes on banks. And as for Singapore banks, I feel that they are also rather undervalued right now. So for DBS, let's say one of the biggest bank in Singapore, they are currently at a yield of about 6 to 7%, and that is very good. All right, when they were back at like $24 per share, the dividend yield was only like 5%, and right now it's at 6 to 7%. So this is definitely a good time to be accumulating on banks if you believe in their strength. Okay, so I have the next question on ISDN and bulk state. So these are Singapore stocks. So Singapore stocks is a bit hard to analyze. If if you have watched the video that I've posted along with the notification of this live session, you have known that these are my criteria for evaluating whether or not a stock has the fundamental strength as well as the growth potential in them, and whether or not they have value in them. So the problem with stocks that are not list they are how to say with the problem with companies with non-US companies is that there is very little analyst coverage on them. So we need coverage for this very important criteria, that is the positive growth rate. So we need the analysts to provide us with their estimated growth rate, and with this estimated growth rate, then we can properly translate and calculate the intrinsic value of the company that we are looking at. So for ISDN and bulk state, this would be where the problem lies, because there will be a lack of positive growth rate. And also another thing is that Singapore companies, I feel that the growth potential of these companies are rather weak because of the market, the economy, the economic situation of our country, and that is why I do not dwell on Singapore companies and Singapore stocks that much, uh, except for with the exception of like banks and REITs, dividend paying stocks. Okay, so all right, so I'm seeing a lot of questions. So which one should I start with? All right, so what's my view on Tesla, Baidu, JD, Facebook, Trade Desk, I think TTD. So Tesla and Tesla, yeah, I have another guy asking me about Tesla as well. So Tesla, the problem with them, let's go through Tesla using the value investing strategy, all right? So the first step that we want to see is increasing profitability. And for that, I rely on Morningstar. Okay, so under Morningstar, I'll just go over to financials and just click on the income statement and then wait. All right, sorry. All right, I forgot. Routers would be a better website for our first step, right? Because they can show us the graph, a snapshot of the graph as well. So that will be better for visualization. The old website that I used to go to would be Morningstar, and Morningstar right now would be better for intrinsic value calculation. Okay, so just financials, search for Tesla, and then we can see they have been increasing their revenue very, very well for the past 5 years, a consistent increase. The next one we want to see is the net income. So you can see that their net income is at a negative, right? So meaning they are at a loss. They are still not earning, they are still not making any money right now. And then lastly, cash flow. So cash flow, I'm interested in the cash flow from operating activities. This line over here. And we can see that they have been in the negative for the last 3 years and only becoming better right now. So Tesla is a rather, I'll say that they are still at a very early stage for us to be consider, for us to look at it in a value investing perspective. Just from the first step itself, failing our failing any one of our criteria is very severe and is definitely a big no-no to me when I look at when I saw this kind of results. All right, so Tesla straight away will have already failed our first step. And if you don't believe and you go on to the second step and third step and so on and so forth, you will see that the reasonable debt, they would also have failed it very badly. They are in very huge amounts of debt that is scary to some degree, and whether or not they can properly manage their way through this debt is still a question. All right, so no doubt I know that Tesla, it has been a very hot topic and a very hot company, right, with a lot of like future potential of all their electric cars and whatnot. But for to be safe as a value investor, they are still at a too early stage for us to take up a position in. Okay, so for Baidu, the problem with Baidu is that uh, most they are the largest search engine for in China, but then the people over there, they are kind of resistant the to Baidu because of some of the censorship that they employ, and also some of their advertisement techniques. So I've heard from some of my friends that they are from China, that their views on the people's views on Baidu has been rather negative. So because of that, I don't think it is a very good potential stock for us to be holding. And if you look at the price action of the stock, it has been dropping consistently ever since like 2018, 2019, right? When most of the other tech stocks have been performing rather well, Baidu has been suppressed for a very long time. So for this reason, I will not touch this company. And for JD, if you JD is definitely one of the up and coming e-commerce company. But if you talk about this, then I would ask why not look at Alibaba instead, because they are the largest player, and therefore their fundamental strength and also the growth potential for that company will be better. And for this point alone, I'll prefer Alibaba over JD. All right, and Facebook has been one of my favorite stock, and I've also held a position in it. So if we look at Facebook, their fundamental strength have been very strong. Okay, so step one, revenue, you can see is a perfect pass, increasing very nicely for the past 5 years. Net income, no exception, except for like the recent years, just a slight dip. But if we average out, it is still generally increasing consistently. And the last criteria of our first step, the cash flow. So cash flow from operating activities, likewise, has been increasing very consistently for the past 5 years. So this is a very good pass for us. And for growth rate, you can see that the earning per share next 5 years awarded by the FinVis analyst has been at 16.16 over percent. So this is more than the double digit. This is more than the 10% that we are looking out for. All right. When filtering the list of the best, the strongest and the strongest companies to invest in. And next, for competitive advantage, I would like to go over to investing.com and search for Facebook. So investing.com, they give us these financial ratios. And to be stronger than your peers in the market, we want to look out for two things. All right. To be stronger than your peers in the market, your gross margin and your net profit margin should definitely be above the industry average. So what you're seeing, this number is the gross margin and the net profit margin for the company Facebook, and this one is the industry average. So as long as you're higher than the industry average, you can say that the company definitely has a competitive advantage and either a narrow mode or a wide mode to it. So for step 3, it passes as well. And then for our fourth step, we want to look at a high ROE. For this one, we go over to FinVis again. And FinVis, you see ROE is 21.5. So for ROE, we are looking at a figure of anything above 15 is good enough for us. Okay, and then lastly the would be the reasonable debt. It should have a reasonable and sustainable debt. And for that, we want to look at the first criteria, current ratio. Current ratio should definitely be more than 1. And where is the current ratio? Current ratio right now is at 4.6. So this passes as well. And then what's next? Next, we want to look at the debt to equity ratio. For debt to equity ratio, we go over to the balance sheet. We want to look at total liability. Total liability divided by total equity. So You can see that the debt to equity is also less than 1, all right, just about 0.3. So that is a pass. And then finally, for our last step is the net interest expense. And for net interest expense, we want to go over to look at to find out their interest expense, and that can be found over here. So go over to income statement, and then you can have scroll down, and then this net interest income or expense. Expense, if it is an expense, it will be in brackets. If it is an income, it will be without brackets. So we can see that they have an interest income of 800. So they do not even have to worry about paying interest on their debt, on the things that they on from the money that they borrow, right? They have a positive interest generation for them. So they pass our sustainable debt very nicely as well. So these all 5 steps, fundamental strength and growth for Facebook has been a perfect pass so far. And then if we look at the value, intrinsic value calculation, previously I've done this analysis, and then back then it was conducted on the 28th of March, right? And back then I've calculated an intrinsic value of 208, and versus back then the price was like 150 over dollars. So that back then it was undervalued. Is it still undervalued right now? So let's take a look. Wait, let's refresh. All right, I've just refreshed the current price of all these stocks. And then, so first things first, the cash flow. So cash flow, we can get it from, okay, for intrinsic value calculation, I like to look at Morningstar because they offer us the latest numbers, the latest figure, this TTM figure over here. And that is what we want to look at. So cash flow, if we sum up everything, we can see that their cash flow from operating activities trailing 12 months is 2.6 billion. So let's key in 2.6 billion converted to million. That would be like 26,000. Okay, next we want to look at their total debt. Total debt, go over to balance sheet. So for the debt, I only take into account the right, let me expand this. I also want to look at quarterly. Okay, let's deal with the current assets first. Current assets is easier. Current assets, I just look at this total cash, cash equivalent, and short-term investment. And at Q1 2020, that will be just 8 billion. Is there 8 billion? 8 billion should be 8,008. Is there a mistake? 16. Growth rate was 16.4, we have seen just now. And then in that case, this should be 2,600, right? Okay, next. For debt, I want to look at, now I can just summarize this. For debt, I want to look at the current debt and the long-term debt. So the current portion of the long-term debt, we can see that total current portion of the long-term debt is 3.45. Oh no, I get why, because this is Tesla. We've been looking at the wrong company, sorry. No wonder the figures has been so small. Yeah. Yeah, thanks, the face. Right, I got nervous for a minute over there. It's like, since when has Facebook deteriorated so much? Okay, apologies for that. Yeah, let's get back on track then. So cash flow, no data available. Okay, never mind. If sometimes this kind of glitch happens, if that happens, then we can only rely on routers. All right. So from routers, cash flow, operating cash flow. Where is that? This one, the 36314. So we just key that back in 36314, 36314, and then if okay, so we can still use Morningstar for the rest. So total assets, Facebook has 60 billion of liquid cash on hand, 60 billion of liquid cash on hand. So that's a rather huge sum, 60 billion. And then total debt, what is their debt? So for debt, I want to look at current portion of long-term debt. There is like 0.84 billion. And then the next one is their long-term debt, all right? Long-term debt, they have capital lease. I normally do not take into account capital lease obligations, but if you can choose to take it in, and that will give you, let's say, a more conservative figure. Okay, so from FinVis we can get the from FinVis we get growth rate, which is 16.37, and then also the shares outstanding, which is at 2.85 billion. So 2850 and then 16.37, right? So what's the discount rate that we want to use? For discount rate, what is the beta first? The beta is 1.2. And if we match 1.2, we'll be using a discount rate of 7%. And there we go. So the current intrinsic value of Facebook shouldn't have changed much because the numbers have been relatively constant. So right now, IV of Facebook is at 221 and the current price is at 228. So Facebook is rather fair, is rather at rather fair value right now. And if we allow a 25% buffer to our intrinsic value calculation, the calculated intrinsic value, it can reach up to a valuation of 276. All right, so personally for me, any price range between 221 to 276, I'll consider Facebook to be at fair valuation. Okay, so this number to this number. All right. So there you have it. That's an example of analysis for Facebook. If you are curious about the rationale of me doing certain steps and whatnot, all right, you can go over to this three-part series video that I've created back a while back. So these three videos would have broken down all my rationale and why I look at certain steps and why do we need certain combinations and so on and so forth. Okay, so yes. So Yahoo Finance has TTM. Yes. So you can also make use of other sources and websites that you can get your hands on. So then the latest question that I get is Amazon a good stock to invest in? Definitely it is. So these are the previous examples that I've analyzed. So I've done some of the value analysis for you guys already, like FedEx, Micron. FedEx has deteriorated. Yes, it is no longer strong anymore. Micron has been rather good. So out of the FANG, Facebook, Apple, Amazon, Netflix, and Google, I only disagree with Netflix. All right, the other four have been very strong and very strong stocks for value investing. All right. And then we have some China and Chinese companies as well, like Ping An Insurance, Alibaba, Tencent, and Baidu. I've just dropped it out, and you can see from the thumbnail. And then 5G, credit service industry, and also some coronavirus proof stocks. So Amazon is definitely a strong company. So the thing that you want to consider is to calculate the intrinsic value for it. Okay, so currently I'm not sure if it is still at if it is still within fair valuation. So you have to do this calculation again. So the trade desk, let's take a quick look for at the trade desk. I've never reviewed this company before, and so it's basically rinse and repeat. All right, all the steps. And the first time round you want to do your analysis, just make sure to open up all the different websites that you will rely on, and then it will be very easy for you to just switch the tabs and just search for the ticker symbol every time. Okay, the trade desk revenue, a good pass. Net income, a good pass. And lastly, cash flow. Cash flow from operating activities. All right, this is not so nice. All right, but I can still close an eye to it because the previous two criteria has been passing rather perfectly. All right, so sorry. So the cash flow from operating activities, you can see that it is like, if we average this out, it will be flat. Okay. So next, let's look at growth rate. So for the trade desk, growth rate is remarkable, in fact, at 28%, not that very good. And ROE also passes our criteria, so there's already a pass for step 2 and step 4. What about competitive advantage? All right, so financials, and then go over to ratios. So the trade desk, does it have any competitive strength? Gross margin above, good. Net profit margin above, uh, good as well. Okay, so it is definitely a strong company so far. And the next thing that you want to worry about is the debt. So is the debt all right? Current ratio is a good pass, above 1. What about its liability and equity? So financials, go for the balance sheet. Scroll down. Total liability 1 billion. Total equity, where is total? Okay, so the debt is a bit worrisome. Okay, so we have 1 billion of liabilities and 600 million. So about 2:1 debt to equity. And then lastly, interest expense. So the trade desk, all right, financials. So it's under, sorry, interest expense, right? Interest expense, we can just rely on routers. Sometimes I get confused as well because there's too many sources to jumble to and fro. Okay, income statement. Income statement, and then net interest expense. So it has been incurring an interest expense for the past few years, only having turned positive this year round. So in that case, we can say that it should not have to worry about interest expense as well. So in that case, for having a reasonable and sustainable debt, we have 3 criteria, right? So current ratio, debt to equity ratio, and then the interest expense of the interest coverage of the company. So for the trade desk, it passes 2 out of 3. It failed the debt to equity. So personally for me, having passed 2 out of 3 is good enough, as long as the debt to equity do not fail that badly. So 2:1 is still manageable. Just don't give me an obscene number like 5 times is to 1. I've even seen companies with like 10:1. All right, that's like too much. That's way too much debt to handle, and that's definitely. And even if you pass 2 out of 3, and even if you can pass the previous steps very nicely, I'll still give that company doubt. Okay, so 2 out of 1 is okay. And then having passed 2 out of 3 and a perfect pass for our previous 4 steps, I can still accept the trade desk in as a fundamentally strong company with potential growth. So the last concern would be, is there any value in the trade desk? So the trade desk, let's make a new line for this. Okay, so today is the 14th. Okay, so the first thing when we calculate the intrinsic value would be to look at the cash flow. So cash flow from operating activities is standing at 103 million. So 103.2. So what's the assets and debt? Go to balance sheet for that. Total assets, cash, and right, I want to look at quarterly to have the latest figure. So cash and so liquid cash basically 0.45 billion. So that's 450 million. And then total long-term debt. All right, long-term debt it has 0.14. Current portion of debt, total current portion of long-term debt is just 0.02. And this, we have to take note of the units, all right? This is in billion. Just now it's in million. So sometimes it gets very confusing and easy for you to make mistakes. So 0.14 and 0.02, that's 0.16. And in billion, so that is 16. All right, let me know if I'm wrong. Growth rate is 28%, right? So what is the beta? And the shares. Shares outstanding is 45.5 million. 45.5 million, beta is 2.6. That's extremely high. So from the beta, we can tell that the stock is a very volatile stock. So 45.5. So for that, I'll award it a 9% discount rate for the highest beta. And then shares outstanding 45.5 million. Okay, so we get an intrinsic value of 58.2, $58.21. So current price is at 354. So sorry to say that although it is a very strong stock with a huge growth potential, its balance sheet, with the current balance sheet that it has, the value of this stock is only at $58. And right now it is way, way, way too overvalued. Okay, so $58 is only somewhere around here. That was like the 2018 price. Yeah. So this stock is too overvalued for value investing. All right, so you might want to wait for a huge correction, but even so, back down to 56, that would be too ridiculous. And even if it happens, we have to come back and reanalyze the company again. But from the price action of this stock, this does look like a pretty good stock to be trading in, right? Even though we can't invest, we can trade. We can trade the stocks, and for that we will have another strategy, and that's another topic of discussion altogether. Okay, so I hope that have helped you out and given you some insights for that. So let's go back to our list of questions that we have. I hope you are all still here with me. And how do I value KO? They seem to be deep in depth. And how do I value ETFs, you mean? Walt, if you are still here. So ETFs, we do not have to value ETFs, right? ETF is already a diversification by itself. It has already consist of like a whole range of portfolio. For example, the S&P 500. It is the 500 what the 500 biggest companies that represents the US market. All right. So that in itself is already a diversification. So you do not really have to value ETFs. But to see whether from a fundamental standpoint, whether or not a market is overvalued, you can look at the PE ratios of the country, right? So whether or not US is overvalued right now, the market of the US is overvalued right now, you can look at the PE of the US market. Whether or not China is overvalued right now, you can look at the PE of the China market. So that's how we value. That's I wouldn't say value ETFs, all right? So then how do I value KO? So KO is I'll just do the same, just rinse and repeat the step again. And if out of these 5 conditions, basically I want to see a pass in all these 5 conditions, all right? Even if like some sub criteria can fail or doesn't match up so nicely, it can, as long as these 5 steps are a pass, then I can accept them. And by putting through a company through these 5 steps, we are already filtering out like 99% of the companies in the US market already. Okay, so yep. And what is, yeah, so curious on the usage of SMA and not EMA. What are the reasons of using SMA when looking at trends, especially when it seems your trends are over a longer period? Okay, so precisely because of that, because looking at the we are taking things from a bigger picture. That's which is why I'm using SMA. SMA reacts slower, and then by reacting slower, there is lesser false signal. So for the big picture, when analyzing the broad market, I like to rely on the SMA a lot. And you can see that these 2 dotted lines over here on my chart, they are the EMAs. So EMAs, I do not use them much unless for trading. And some certain strategies that I use will require like different combinations of SMA and EMAs together. So that's just some that's just my view on SMA and EMA. Just nothing particular. And if you have your own set of moving averages that you like to use, so feel free to go ahead. And there's no right or wrong. Someone might like to look at, let's say, the 9 and 18 EMA, and someone might like to look at the 50, 100 and the 200, or someone might like to look at 50, 150, 200. Right? So just no right or wrong to that. Okay. And the best broker to use in Singapore, the best broker, local brokers are all rather expensive. So I just personally, for me, I'm using DBS to trade, because it is offering one of the lower what's that the lower commissions, and then it is also one of the more stable broker out there. Yeah. And next question from Walt. What is a good source of EPS next 5 years? They seem to vary a lot. Yes, I agree. So when we talk about the earning per share for the next 5 years, which is the growth rate of companies, right? So the third step, no, sorry, the second step, positive growth rate. And if you recall, in intrinsic value calculation, we make use of this step again. So step 2 is very important. And step 2 would determine the value obtained from step 2 would determine the value of your intrinsic value a lot, because we are projecting it exponentially. Okay, so how can we get a better estimate of the positive growth rate. I have three sources. So the first one would be from Finviz. Finviz, you all should have already known. The positive growth rate is the EPS next 5 years. And for some reason, for some companies, Finviz has been awarding a rather low EPS next 5 years to them. For example, like Alibaba, right? So if you notice something weird about that source, then you can turn to the second source or the third source if you have. And the second source that I have is Zacks. So if we go over to Zacks, and then just go to detailed estimates, you can see that growth estimates next 5 years is at 19. So for the case of Facebook, Finviz and Zacks, they coincides rather well. So in this case, we do not have a problem. But what if, like Walt says, for Alibaba, Finviz is giving 3, and then Zacks is giving 18. So what can we do? We can take the average of things, and or another way would be to look for like alternate sources, third source, fourth source. If you all have any website or sources that can list the growth rates of stocks, do let me know in the chat over here so that I can build on to our list. All right, so the last source will be simply Wall Street. This is not very good. To use this website, you need to sign in, and then it only gives you, I think, 10 companies. If I'm not sure how accurate this is. So if it is strict, then you can only use this for like 10 companies, right? So if we search for Facebook, all right, sorry, Facebook. We search for Facebook, and then we go over to future growth, criteria number 7. It's not, is it loaded? Okay. Criteria number 4, future growth. Now you can see that these websites, they award them a 19.6%. So rather close. We have Finviz at 16.4. Zacks at how much? Zacks at 19%, and then this one at 19.6. So we can take the average of things if you are unsure or uncertain. And the next thing to note about this website is that the estimates that they give is only for the next 3 years. So this, we can close one eyes and just assume it to be like 5 years. But yeah, that might cause some accuracy problems as well. If the value awarded by this website is drastically different from the previous two, then you might want to take into consideration this condition that they are valuing their companies with. Okay, so can I share the Excel sheet with you guys? This Excel sheet that I've made is you can simply get them. I've also made a video on it, on how you can create your own Excel sheet, and that is, where is it? Here, this video over here. So this video has all the steps required that you need to make an calculator to calculate the intrinsic value. All right, just something different is what I've done slightly different is that I've compiled an entire calculator into a single row over like this, which is why you are seeing my version looking like this. All right, if not, yours should be something like this. Nope. Where is it? All right, never mind. I can't. Oh, I should be. Where is that video? Okay, never mind. I can't find it. All right, it's all in the video. So just look it up, and steps all the steps will be explained in there. If you still have any questions, do drop a comment in that video below, and I'll be sure to answer you firsthand. Okay, so is there any good sources to find SMA values 50? So your charting software should already report these values easily for you. Okay, so for example, this is this is the platform that I use, Think or Swim from TD Ameritrade. If you mouse over these MAs, the values will be just at the side at the price over here. Okay, and if you do not have access to such softwares, a free one would be TradingView. This is another good website that I use to look at prices, especially for non-US stocks, right? Like Chinese stocks and Singapore stocks. I use this a lot. So um, let's just key in an example. Let's just use Facebook. Yeah. Okay, and then just click on full featured chart. There is a paid subscription for this, and if you pay for it, then you can enter in more indicators and also more moving averages. I'm using the free version, so I can only enter in a maximum of 3. And you can see that the blue one is a 50, this one is 150, this one is 200, and their values are all labeled at the set prices over here. All right, so Mark, I hope this answer is clear enough for you. Let me know if you still have any doubts. So do you think the stock market bubble in the US will burst soon? Jason, may I ask you why do you think that the US is in a bubble right now? So personally for me, I everything is like overpriced. All right. So if we go back to SPY, now the US is definitely expensive. Okay, so at the current level right now, the US is definitely expensive. Things were very cheap back during the March and April period. This is where we have a lot of good value deals and good value deals back then if we have applied the strategy. You can find things like Microsoft and Facebook easily at undervaluation, even for stocks like what's that? Amazon? Amazon, I'm not sure. Yeah, a lot of my portfolio positions have been undervalued. Things like maybe Facebook and Alibaba. Alibaba back then was also undervalued. All right. And Tencent at about fair valuation. And then, yeah, so I don't think it is still, as of right now, it is still in a bubble yet. And given this huge correction, 30%, this huge crash, 30% crash, I think it should have resetted things quite a fair bit for us. So for the bubble to come, I would say, for the market to be in the bubble, I would say that it will happen when, let's say, the PE, the price to earning ratio of the US market is at about, let's say, like 25 and above. Currently, if you look up sources on websites and on Bloomberg, the current PE ratio of the US market is standing at about 21. And it is the PE is at 21 so high is because it's also because right now we are seeing a lot of the earnings being decreased, right? From the past 2 to 3 months, people cannot spend and everything. Earnings have decreased, but prices have been relatively constant and did not change much, just a crash of 30%. So this a fairly constant price divided by a sharp decrease in earnings will give you an elevated PE ratio. So as the earnings starts to recover, I would in fact say that the PE ratio will slowly drop. Currently, right now is 21. Should drop slightly to, let's say, maybe or 20 or 19, and then slowly climb back up again. So to answer your question, I don't think that the market is right now in a bubble, and if it's not in a bubble, then it should not burst soon. Yeah. If if it bursts, then what kind of levels would we be looking at, right? If we are expecting the market to go back to like the 2015 or maybe even the 2009 levels, right? That for that to happen, something really very severe must have happened to the economy and to the world before we can reach that kind of valuation. And that is that's simply just too far-fetched in my opinion. So you can definitely still find things that are currently fairly priced, like Facebook. I've shown in today's example. So other than that, most of the stocks are definitely are overvalued. So we have, as value investors, we must have the patience to wait. Right, banks right now are undervalued, but also because of the uncertainty, the zero interest rates that is being imposed by the Fed. Yeah. So for any new SaaS companies that are not profitable at the moment will not pass your value investment criteria. Yes, as long as they are not profitable, step one is one of the steps that I respect very highly. And you must definitely pass the first step before I will look at you for the second and third and fourth step and so on. And you must pass all these five before I will even look at your value. Okay, this is how I view this is my perspective on value investing. So if a company is not even profitable, how can that be a how can that be a safe investment? Because when for at least for me, when I talk about value investing, I will be in it at least for 5 to 10 years. And to be in it that long, I want some proven track record for the company itself. I'm not afraid for you to spend 4 5 years and grow to show your track record, and by that time your price will be slightly higher already. I don't mind. I do not have to get in at the very initial stage and capture all the profit. Even if I get in at the mid stage or slightly late stage, I can still capture most of the growth potential that the good company would have in them. That's my perspective in value investing. And for WFC intrinsic value, okay, let's look at this. So before looking into the intrinsic value, I would first like to look at the fundamental strength. If it fails the fundamental strength quite badly, there is really no point in looking at the intrinsic value. Okay, I just record WFC, is it a bank? Wells Fargo, is that right? Yes, so for bank, we do not calculate the intrinsic value. That is because they are dealing with money. And for companies that deals heavily with money inflows and outflows, it will not be so accurate as to calculate the intrinsic value for them. So things like REITs is also something that I will not use the intrinsic value on. And the next will be banks. So for financial companies, banks, I'll just simply look at the price to book, right? 0.71. So price to book, anything 1 to 1.25, this is fair value. Anything less than 1 is undervalued. Anything more than 1.25, I would say that it is overvalued. So currently you can see that the Wells Fargo is currently undervalued with a price to book of 0.71. So for those who do not understand, so the book means the book value of the company. All right, so this means that all right, let's just search up the criteria, the definition. It might be clearer than me explaining and then explaining wrongly. So price to book, yeah, you can see it is. So the book value is what it is carrying, the value of the balance sheet. All right. If you were to liquidate the company right now, what is it worth? And let's say if the balance sheet of a company is worth $1, and right now it is selling at 71 cents. So will you say that this company is undervalued because it is less than the book value, right? So book value is going at $1, it is going at 71 cents, which is the case of Wells Fargo, right? 0.71 price to book value. So for banks, it's very easy. We do not need to calculate the we do not need to calculate the intrinsic value. Just have to go over to FinVis, look at the price to book. And also for the rest of you who are thinking, let's say you are calculating your intrinsic value for the first time and you are doubting yourself whether whether the value I'm getting, is it correct? Is it really accurate or reliable? So for example, if you are someone doing this for the first time and you execute your analysis on the trade desk, previously we have seen, right? We've calculated the intrinsic value of the trade desk to be $58. And the current price of trade desk is like 300 over dollars. Right? As a beginner, you might doubt yourself. Something must have gone wrong. Right? Why is the straight stock price current price like 300 and I'm only getting 58? So if you are having this doubt, what you can do is to come over to FinVis and double check with this figure with this figure that's called the PEG ratio. Okay, so if the PEG ratio is more than 1.5, I also say that the company is overvalued. It should also means that the the company is overvalued. All right. So let's go back to our example on the trade desk. The trade desk, yeah. Okay, so you can see that the PEG ratio is at 5, and this simply means that the company is about 5 times overvaluation. And if we calculate 60 over a stock price of 30, this is our IV that we have gotten. This is the current current stock price. We got a similar ratio of about 5 times overvaluation, right? Yeah, so this is one way to double check your workings to see whether things correlates with your calculation. Of course, sometimes the PEG do not always work. There are cases whereby the PEG shows undervalue while I calculated overvalue. So if that happens, then you must have the confidence in your own workings. Okay, so how much money do you usually allocate for each stock? That depends on what's your position size. Okay, so yeah, I see US stocks, for example, Facebook is expensive. So for US stocks, they do not go by lot. One lot is simply one share. So you can just buy one share of Facebook and that will be $200. Okay, so and in fact, some brokers like interactive brokers, right? They offer fractional shares. You can just buy like 0.1 share of Facebook and that will cost you like $20. So yeah, the US trading is very flexible. Unlike in Singapore, we have to buy one lot of 100 shares. Or like in Hong Kong, some stocks is one lot 100 shares, some stock is one lot 500 shares, right? So how much money do you allocate? That depends on your position size. So for me, with my current net worth and my ability, I can only allocate like $1,000 for each stock. Yeah. Do you think it's a good time to go into US? So following our earlier analysis, if 302 shows to be a strong support and prices start to rebound already next week, all right, then this would be a good time. This might be a good time to enter, but of course not into every stock. It depends on a case by case basis from the price action of the stock itself. All right, if the correction can occur deeper down into the 294 category, that would be an even better deal and better offer to accumulate. So yeah, definitely the bottom is most likely over already, and these are the prices that we are currently looking at. So this is my view, and I will start to accumulate into stocks that I see value in. Yeah, so like banks, for example, Bank of America. Yeah, and okay, so I know I missed some of your questions, so I'm going back to look at them. So for value investing, will you say price is good when something is wrong with the company, when market crash? So value investing, something is wrong with the company. Yes, but it depends on what is wrong with the company. When that something is wrong with the company involves financial fraud, right? Then that's the signal whereby you want to steer clear of the company for good. All right. So for a company to be accused of accounting fraud, that is very severe, and most often, most likely, these companies would have a very hard time recovering or never recover at all. So if a company is accused with fraud, straight away get out. Yeah. And if not, if it is just some negative news or some PR management, for example, the Facebook scandal leak, the news leak scandal or some privacy scandal back in 2018, and then subsequently resulted in Facebook dropping to $140. So that is something that can be issued. That is something that Facebook can manage and will definitely be resolved sooner or later. All right. So this would then be a good time to accumulate into those companies. All right. So for example, like Google recently being fined with like 1 billion or something, right? Yeah. So this is something that you want to take advantage of. 1 billion to Google is nothing, right? It will not even impact their business profitability at all. But on the other hand, let's look at Boeing or some of the cruise lines or airline stocks that have been heavily damaged by this COVID-19 situation right now. So for these companies, something is wrong with the company, yes. But the something that is wrong is their business, the health of the business. So for this case, you would want to reevaluate these companies and then see whether or not uh, the the health of the business, their profitability is still intact before you enter again. And when market crash, yes, when market crash, and the best thing is when market crash and it is none of the company's business. For example, in this crash, in the March crash, it is none of Facebook's business. It is none of Amazon or Google or Alibaba or Tencent's business, right? So very easily after when the stock market starts recovering, these stocks were the first one to go back to all-time highs. So this is also a very good time to accumulate in these companies. Right, something what we call fall in sympathy, right? So when the general market fall, although there's nothing wrong with it, it just fall together in sympathy. Is the valuation in Simply Wall Street or Yahoo Finance trustworthy? I can't really say whether or not they are trustworthy, but I simply just believe in my own valuation more. All right, since I know how to calculate, I rather calculate myself and then to look at theirs. Yeah. So yeah, that's just something. So I have another question from Cindy. Is this Zscaler a good stock for long term? May I have the ticker symbol if you're still here? Then I'll go through your question. Yeah. Is DBS a good entry right now at 21.93? So 21.93 is not bad. I have for me DBS for my chart, right? I've marked out the 21.2, $21.20 as a rather strong support level. And this level you can see it coincides with the 0.5 with the 50% Fibonacci retracement, 50% retracement level, 50% Fibonacci retracement level, right? So coincides with the 21.4. So 21.93, you can enter if you think this is the correction is over, you can enter, or you might want to wait for a few days, see whether or not it can come back down closer to this level, then you accumulate. All right. But of course, that if you do that, then you risk it going back up again, then having to wait again, right? So just dollar cost average. Yeah, that's the best approach. You can buy a little bit, maybe half of a position at 21.93. If it drop, then you buy another half, which is even better for you. If it goes up, then too bad, and you just have to enter your another half at a slightly higher price. But when average out, it should still be a good deal for you. What is your view on current Berkshire Hathaway? So Berkshire Hathaway, I would say it is like another ETF by itself, even though it's a company, right? So it is just basically tracking Warren Buffett's position. And with his performance recently, mm, I wouldn't touch that company. Yeah. Do you buy in fair value prices? Yes, I only buy when they are fair value or undervalue, or fair value plus 25% buffer. This is the buffer that I give. Yeah. What is the period you use for your SMA? Does it vary? No, I do not vary my SMA. So for SMA, I always look at 50, 150, and 200. 100 sometimes as well, but rarely. So what period and timeline? I always look at the 1 day chart. I'm a swing trader more than an intraday trader. So that's timeline and period. What do you mean by period? Like the moving averages? So do you think Boeing is a good investment now? Well, Boeing is a tough one, right, to calculate the intrinsic value because its business has been impacted. It is faced with fines and whatnot, right, and it is and it has to borrow some has to borrow what was it? What did they do? They funded some funds from some sources, right? I'm not very clear of which. I only know that they almost wanted to borrow from the Fed, but then from the government, but they had some other alternative sources instead, and that saved them. That really saved them a lot from their recovery. So for Boeing, is currently at 189. So the valuation, I would say it would be about current valuation should be around. I can't really say. Okay, I have to go into the depth of the calculation. But for recovery wise, I think it's going to take a rather long time for the for the airlines to go back into normal business and for their 737 Max problem to be resolved, right? It's going to take some time. But if you think that Boeing is really too big to fail, if you really think that the government will never let go of them, then you can invest in them. And the thing about investing in Boeing is you must really have the patience for it to really take a very long time to recover if it really needs to. Yeah. Should we be looking at daily, weekly, or monthly chart to decide price support level? Well, you can look at all three. But I'll rely on the daily one more first. So I'll look at the daily chart, and then if it seems like a good deal or it seems attractive, then I'll go into the weekly or the monthly chart to look at how things are, right? For example, like let's say let's say something. Okay, let's go to like Zoom, right? So Zoom is a very new and hot and coming stock as well. So currently it is so high, right? So let's say if it bounced to to the 50 SMA, it looks like a good deal. Then I might look at the weekly and see how it fares, right? So even though it is at the 50 SMA for the daily chart, if we go into the weekly chart, it might still be rather far off, right? You see, it's still the okay. Sorry, we should look at the prices. So let's say the 50 SMA is $164, and if prices drop to $164, we go to the weekly chart, and then can you see that 164 is only around here, right? 164 is about this level. It's still rather far from the 20-week exponential moving average. So for this, then you might want to wait a bit longer for it to maybe touch this first before getting into your investment. All right. Just an example, okay? Doesn't mean that Zoom is a good company to invest in or anything. Yeah. So where whether or not to look at daily, weekly, monthly, and when, this will depend a lot on your mm, on your experience and your judgment. Yeah. So for okay, so that Cindy, your company ZS. Okay. So for long-term investment, right? You asked. So let's look into it. First step, routers. And meanwhile, let's go to Finvis. Technology company. Growth rate is good. Growth rate is good. ROE is failing for some reason, so they should have relatively low ROE, relatively low equity. Current ratio passes. Okay, so let's look into the first step. So ZS revenue very nice. Net income, okay, net income fails very sadly. Cash flow from operating activity only recently then it get back to positive levels. All right. So yeah, from the chart, I can see that it is a relatively new company, just recently IPO'd. So you might want to wait for, give it some more time for it to mature first and show a positive net income before investing in it, right? The revenue is very nice. If they can keep this up, I think that they should definitely have the potential, right? So from how do you see if the market is at the bottom so that we can buy at the lowest using the chart? Okay, I cannot tell the bottom. That's something that uh very very little people can do, and in fact, I would say like almost no one can do very accurately. We can based on technical signals and whatnot to guess the bottom. For me, I also do not know that the March bottom would be the bottom. I also did not know that this would be the bottom until this happens. All right, until this higher low forms, and then what next? Another signal that I've went through before in one of my previous live sessions is that on the weekly time frame, the SPY is at oversold territory. If you look at the stochastics and the RSI, if I recall correctly, right, it is at oversold territory. And if we go back to look at all the bear markets in the past, a drop of like 36% is the average of all the bear markets in the past. So this time round, the market having dropped 36% and then recovered to form a higher high, this gives me the confidence that hey, maybe the worst is over. So and then it gives me the confidence to dabble and take a little position from here. So for me, I took up most of my quite a lot of positions during this point in time, during this slight recovery, and then also at this bottom after the formation of this bottom over here, right? Stocks like EEM, like Microsoft as a trade, and a lot more, right? Mm. So yes, so if you are new to the channel, the bear market analysis, you can find them over here in these videos. So I've done a 2020 Q1 market and update and analysis. So back then it was the March season, and then next I went through another I did another video to summarize all the bear markets and all the stats that you should know and you should familiarize yourself with to better tide yourself over this bear market, right? When everyone is panicking and panicking to sell and whatnot, you'll be there, be focused with the correct you'll know what's the right thing to focus on. Yeah. Okay, so where were we? How do I see Intuitive Surgical? Is that a Singapore company? For value investing, do you have to hold 5 years at least? It's more for trading than value investing. Do you think my view is right? Well, okay, the holding period is really up to your personal ability and appetite. All right. But for me, I really want to hold for as long as possible. And if you say that the US is more for trading than value investing, well, I disagree with that saying. Okay. So if we just go to look at the monthly chart, to look at the biggest picture, you see the SPY. If you're invested in the SPY for the past 10 years, all right, let's say that you are the most unluckiest guy and even get in at the peak before the great financial crisis at 2008, 2009. Even if you get in at the peak, you would have easily doubled your money over the past 10 years. And for many of the great stocks like Facebook, you see a very beautiful one straight line up. For Amazon, exponential line up. For Adobe, exponential line up ever since the history, right? See, it has never been in a decline before. And what else? Alibaba. Alibaba is rather new in the market, right? It does nothing much to see. Google. Google, a straight line up as well. Apple is also exponentially up, right? So with these stocks in the US market, value investing definitely has a place in them. And if you have the ability to spot the right stock and hold on to them for like 10 years into this into this into these fundamentally strong stocks with the growth potential and the value in them, right? You can easily beat the market. The S&P only doubles your money in the past 10 years. But if you look at these stocks, you can easily like triple or even quadruple or whatnot. Yeah. So this is my view on the US market, and this is why I choose the US market to invest in and even trade in instead of the Singapore market or whatever else market. Yeah. So because the US market offers the highest growth potential. And the next one, up and coming one, I believe, is in China. And which is why I'm taking up positions in China and Chinese companies as well. Yeah. So I hope that brings to you another perspective at least. All right. And can I share what I bought recently? Can better understand your value investing strategy. Okay. So recently what I bought is Disney at $120. That's a bit at the high already. And that is I unfortunately I missed out on the edition on Facebook when it was like 160, 170. I did not add into Yeah, back then I also did not add into Alibaba when it was like $170. That is unfortunate in hindsight. But what I did back then was I accumulated EM, a global emerging market ETFs. I bought like about 40 over of them to round it off to 200 so that I can execute my wheel strategy on it. So yeah, for wheel strategy it is like option strategy, right? That's more advanced. And so when I accumulate my stocks, right, I do not simply just buy them. So for example, I've been wanting to buy the Bank of America, but I do not just simply buy them. Instead of buying them straight up, I sell a cash secured put for Bank of America at the following strike price so that when triggered, I will then buy them at $24 and $25. All right, same thing for EM. I've also sold a $35 strike put back when the market crashed heavily in March. So this is some of the positions that I've taken up for my investing. So for investing is really not there is really not so much action. So I only look at it like once every 3 months. That's when I top up my account, and then along the way, if there is any value picks or undervalue stocks that appear, then I'll buy them. Yeah. So it is really a very slow and steady and sometimes boring process. Yeah. So you can see most of the company that I've analyzed, like Google, Tencent, Alibaba, Facebook, Amazon. Yeah, basically these stocks I own them. Yeah, and you can look at my trade price. I've gotten them when they were all under valuation, which accounts to the bulk of my profit in my account right now. Yep. Yeah, I agree. Slow and steady, but can earn, can already. Yes. You think we will have another March low if there is a second wave? Well, it's hard to see. It's hard to say. I mean, we have to really see if the economy really gets shut down again, then yeah, there might be a chance for us to retest the March low. But if the U.S. government, which seems like it, if they are going to forcefully reopen the economy, then I think with the economy back on track, the March lows is perhaps a rather might I mean rather low possibility, yeah, probability. US company Intuitive Surgical. Intuitive Surgical. So do you have the ticker? May I have the ticker symbol, please? Yeah, it will be make things easier for me. And next, QQQ ETF all-time high. Though it is an ETF, do I recommend? Well, if you think that tech is the future, tech has the highest growth potential in the future, then but you do not know which tech companies to pick on, like I did, like what I've been doing, then you can do the safe method and just invest in QQQ. Yeah. So, but definitely not right now, not at all-time high. Wait for a correction back to like technical supports or moving averages, then start to accumulate in them. All right. So, or if you are, yeah. So that's basically for ETFs. It's basically like uh not so nice to put it, but some like a lazy investor style of investing. Yeah. Okay. So what would you recommend a 21-year-old to invest in with 10,000? So definitely do not go all in. Invest in stages. All right. So if you need more if you need more guides or so on, look at this video. How and what to invest with a small capital, right? So in there I talk about diversification, I talk about how to allocate and how to position size, how to do a simple position sizing for investing. All right. EIMI and SW, good combination. Okay. What platform is this? Which this interactive? I mean, wait, this my charts is the Think or Swim platform, right? So just stated that current healthcare news is far outweighing financial news when it comes to the market. If that's the case, should be another downturn in the market coming. Well, these are just news, so best to really look at price action. Yeah, I always just read news as like a story and take them with a pinch of salt. Yeah. Does investing S&P 500 and QQQ be overlapping? Yeah, there'll definitely be some overlapping. So if you want to diversify or invest in other industry, in specific industry, then that would be That will be like your SLK, XLC, and XLU, or your energy sector, your utility sector, tech sector, financial sector, consumer discretionary sector. So each of these sector has a ETF for them. All right, you can look at, oops. Yeah, so they are all under this video, this video over here. So all the different ETFs that you can consider for different industry and also for different countries. So for China, I have also a few ETFs that I'm looking at for like yeah, basically China is the only other country that I'm looking at. And for the rest, I just dump them into EEM, the global ETF that tracks the emerging markets. Okay, so we are running out of time. I'll just go through the last few examples and then we will call it a day. From Huizhen and Hintek, right? So EIMI, SWRD, and ISRG. Okay, so just a quick look on this. Okay, let's go Finviz. My favorite is to go to Finviz first as a quick overview when I come across stocks that I do not know. Do you give me the correct ticker? Both of them could not be found. All right, ISRG. Or did I get your comment wrong? Okay, ISRG, what is this? This is a healthcare. Wow, from the PEG is very overvalued. Let's see if that's really the case. Current ratio is good. Growth is very low. ROE is okay. Okay, so the problem with a low growth rate, right, is that we might get a very low intrinsic value, and that might account for why the PEG value is so high. Yeah. Level up investing. You are from the US. Good morning to you. Revenue is very nice, increasing very nicely. Net income is likewise very nice. This is the perfect pattern that a stock can give, right? And I like to see this pattern, this very nice slope up. So cash flow from operating activities, likewise very nice. So step two is a fail already, all right? Because for our value investing, for the growth criteria, we want at least double-digit growth rate. But we can still close one eyes and see, as long as the company can still give us an undervaluation rating, we can still take it into consideration. So competitive advantage, ISRG. Oh, sorry, wrong website. Yeah, ISRG. And lastly, ISRG. ISRG financials, dividends, ratios. A good pass for, sorry. Yeah, here. Gross margin. Gross margin is a pass, and net profit margin is, wow, also a pass. So it does have a competitive advantage. And then for the debt, current ratio we already see is a pass. What about the equity? We go over to balance sheet, we compare the total liability. Where's the total liability? 1 billion to total equity. So that's a pass as well. And I guess needless to say, the interest expense should be a pass as well. Yes, it's a pass. So it has interest in income. So no interest coverage to worry about. So with that, ISRG passes 1, 2, 3, and 4. Growth rate is slightly disappointing, but let's go ahead and see what valuation does it give us. Okay, so Morningstar, financials, and then Innovio is a rather new stock, right? Is it a penny stock? Cash flow quarterly. No data available. Okay, have. So cash flow from operating activities is 1.62 billion. So there's 1,620 of the debt and liquid cash. Liquid cash, it has 3.25 billion of the debt. The debt, sometimes this whole long list gets me lost as well. Is there no long-term debt? No long-term debt? No current portion of long-term debt? All right, then we'll take it as 0. 350, right? 325. Growth rate is 3.15. I'm worried for the growth rate. Yeah. So shares outstanding 116.4. Beta 0.95. So where does that bring us? 0.95. Let's just give it 6%. I like to be conservative when it comes to calculation. Yeah. So as expected, current IV is only 148 plus 25% buffer. Maximum it can only go up to 185, right? And why is there no current price? Right, doesn't matter. So 10-year 1 day, yeah, it is currently at 558, so it is definitely definitely very overvalued right now. Okay, so it is involved in the vaccine of COVID-19. Yeah, in Inovio ticker, INO is it? So ISRG is definitely too overvalued, and from this chart, right, a quick analysis is that I can see that the chart in the stock prices is somewhat of a consolidation, right? Ever since 2018, it has been consolidating between 455 and 588, these two range. So it might be a very good stock for you to trade instead of investing in. Yeah, every time you hit this lower boundary, buy it up. Hit this lower boundary, buy it up. Hit it again, buy it up again. Yeah, so let's see if the current correction can bring it back down. If it can, then buy it up again. Yeah. So, but of course, when trading, make sure to take into account your risk, your stop loss and your risk management. All right. Okay, so last few questions. For China, what ETF do I recommend? For China, I look at these few portfolios that I have in with me are what I look at: EWH for Hong Kong, FXI for China's large cap A shares, I think, EEM, which also has a large proportion in China market, GXC, another China ETF, and then another one would be ASHR. ASHR is also another ETF that I'm looking at. So these are all listed in the US. And if you are concerned about the tension between US and China, that Trump will delist the will implement the stricter rule for all the non for the foreign company, right, and might result in them delisting. If they delist, then it will cause problem for your ETFs as well, for some of the ETFs. If so, you might want to consider some of the Hong Kong listed China ETFs, and they are 3188. This is one of them. Another one is 2813. Is it 2813? 2183. Nope. I can't recall the 2828 is one of them as well. And there's one more I can't remember off the top of my head. Yeah, 2318, is it? No, 2318 is Ping An. Yeah. Sorry. So, yep. So those are the Hong Kong listed China ETFs. So, yes, you mentioned exited for GXC for ASHR. Is it because ASHR is more weighted in the financial sector? So, did I mention about exiting GXC from somewhere in my video, is it? So yeah, I did consider exiting my GXC position, but I have not done so. And the main reason for exiting GXC and getting into ASHR is not about the weighting. It's more about if I have, because my GXC takes up about 2,000 of my capital. If this 2,000 is invested in ASHR, I can deploy the view strategy, you see. And with the view strategy, I can right? And with the wheel strategy, I can earn myself another 24% if the stock continue trading sideways. It's better than GXC. I have 20 shares, not neither here nor there, and I can't do anything. And for the past 2 years, ever since I was in it, GXC has been trading like sideways. I haven't profited from it at all, right? So keep up and down, yielding no profit for me. Yeah. So that's the reason why I'm thinking of exiting GXC and then going into ASHR. Yeah. So Meituan is definitely too high already. It's it's at crazily high levels. So if you believe in the potential of that stock, then wait for it to come back down to a potential level, and then before entering. Okay, so I hope I've answered most of your questions. I really take joy in answering all of these questions, and I'm sure that there are still a lot more that I have missed and do not have the time to go through them. So I'm so sorry about that if I missed out your question. So nothing personal on that. And if you have watched till now, please do me a favor and just help me click on the like button on the video and help me share out the content that I'm sharing with you guys out to a greater audience out there. All right. So with that, thank you so much for joining me in this wonderful evening, and I hope all of you have learned a great deal. And if you are still here with me, I'll just drop last two stocks for you to go and analyze for yourself and see whether or not they are worth your investment. And that is um, the first one would be what's that? ESNT, ticker symbol ESNT. The second one would be LMT. All right, so take note of these and then go and do your own analysis and own homework and see whether or not they carry value to your own investment portfolio. All right. So when is the next session? So I hope I can hold these kind of sessions as regularly as I can. So as long as I'm free and I have the available time, I'll arrange such a session with you guys again. All right. So thank you all for supporting the channel. Yeah, for supporting the channel and for joining me in this wonderful evening. Okay, I've learned a great deal from all of your questions as well. A lot of the stocks I've seen, I've never come across them before, and definitely I'll put them into one of my watch lists and pay attention to them, where be it for investing or even for trading. Okay, ESNT and LMT. T for tiger. All right, I'll just type it in the chat. All right, good luck and may your portfolio be growing smoothly and successfully in for the rest of this year. And let's hope that the market will be kind to us. Yeah. So thank you, good night, and see you in my next video. Bye.